Hello again, everyone. Welcome back. In this technical analysis of the stock market video, I call it Nothing is Safe, and Exhibit A is Facebook. So Facebook is right up there, one of the FANG stocks, one of the biggest stocks that on the New York Stock Exchange or the NASDAQ or anywhere in the world, literally. But look what happened to it on Thursday. It dropped 26.4%, a literal crash on Thursday. And when you look at the weekly chart over here, this is down 40.1% at the low from the interweek high over here in August of last year to the low this last week, down 40.1%. It is the lowest weekly close since the week of July 19th, 2020. So it is given back about a year and a half's worth of gains and trading, okay, all very quickly. So that is the picture there. And if Facebook is that vulnerable, is anything safe, honestly? So you sit back and say, well, wait a minute, Facebook, yeah, it got killed and it's got its issues, but what happened with Amazon? Well, Amazon, yeah, it dropped on Thursday in sympathy with Facebook. I mean, look what happened. A big gap down, big drop. And it's fighting a major downtrend. I mean, this is a pretty strong downtrend that it's in from back over here, this peak in November with an intraday high of 37.62. And then it hits, what, an intraday low of 27.07. So yeah, we popped up big on Friday, up 375.88 points, but where did it close? It literally closed lower than where it closed on January 18th. So we're not even back really to the middle in terms of where it closed, the middle of the month of January. So, let's not get too excited about this. We'll see what kind of follow through we get. And I wouldn't be surprised to see a ton of chop. And then, everybody's excited about the earnings. I think they're really, they had spectacular earnings. Probably the thing that's maybe affecting the bounce most is the fact they jacked up the Prime membership by 16.7%, I think it was, or 16.9, almost 17%. And that's going to start taking effect in February and March. But the thing that accounted for 82% of Amazon's fourth quarter net income was their stake in Rivian. Let's go take a look at that. So if I scroll down here and pull up Rivian, Amazon has an 18% stake in this electric vehicle company. I think it's focused mostly on trucks, if not all on trucks. So it went public right here on November 10th. And pretty dramatic, closed the first day at 100.73, then rose all the way up here to 179, ended the year right here at 103.69. Since the end of the year, it has dropped 41%, okay, right here, to the close that happened on Friday at $60.87. So Amazon, for the fourth quarter, they reflected a gain. Now, I'm not sure how they actually calculated. I know they have a stake. I'm not sure how they calculate, but you could see where the price action was and where the price action is now. But 82% of their net income came purely from this stake alone. So we'll see what happens. Amazon, I mean, it's a great company. But it's fighting its issues too, and there's a ton of volatility going on in here, and you really do have to ask the question, is anything safe? Now let's take a look at the Dow Industrials. I'm going to go back and we'll look at the Dow. I want to look at Apple today too, because I think Apple's in sync with the Dow, and I think, honestly, I don't think anything is safe. Okay, so who knows what's going to happen, for example, with Apple. We're going to take a look at a couple indicators, and I will look at that 10-year yield, which had one heck of a move on Friday. So let's take a look at the Dow Industrials, and I'm going to go to this Elliott wave picture right here. So here's the peak on January 5th. Here's the very strong move down. I think it's Manu wave 1. I think we have a zigzag pattern back up here for wave 2. Got very, very deep, got above 61.8%. When you drill down, let's take a look at the 65-minute chart. You can see the detail we've got in here. And I think we had a kind of a flat type of pattern for wave 2, sideways pattern for wave 2. And then we had this little short, sharp correction for wave 4, actually very brief. And then we finished this wave 1 here on January 24th. Now, as we look back, what's going on right now in here with the wave count? I think we've got a nice deep move. We pulled back right up into the previous fourth wave of, one lower degree in here of wave 2, this right here. And, it's retraced deep, as I just mentioned. So now I'm watching for a close below the high of wave A of this ABC zigzag and a break of this trend line of this zigzag. Now, it could be interesting that we may have started that with the first hour of the day on Thursday. Okay, so this is Thursday's price action, and then here is the first hour of the day on Friday, and you can see, after that second hour, we turn back higher. And again, I say hour, but I am using a 65-minute chart, so it's close. And then the last bar of the day, the last hour, look at this reversal type pattern that is in place. They really hammered it in the last 30 minutes of the day. They really, really took a lot back very quickly. So we'll see what kind of follow through we get on Monday, with this kind of a move. So that's what I'm watching here on the Dow Industrials. That's what I'm looking for. And let's take a look at a couple indicators. I'm going to come back and show you how in sync this is with Apple in just a minute. But I just want to show you this indicator here. The percent of stocks above their 200-day moving average on the New York Stock Exchange, only 38% of all the stocks on the New York Stock Exchange are above their 200-day moving average. Now you can sit back and say, well, that's pretty low. Wouldn't that mean that, we should be buying this? That's, buy the dip kind of thing? Well, if you go back and look at what happened in March of 2020, you can get a whole heck of a lot lower, below 30%. And you look how it went down and even got very extreme, less than 10% of the stocks on the New York Stock Exchange. And you say, well, yeah, okay, that was extreme. Well, go back to December of 2018. And you can see the similar kind of scenario. So it can get a whole heck of a lot worse. And it's definitely in a very strong downtrend right now. So the underpinnings in the market are not very strong. Now I want to take a look at the McClellan oscillator. And let's talk about where we're at with that. So, we are deeply oversold. We got a very strong 2-day bounce up into here. Kind of similar to what happened, you know what, I don't have the dates here. There we go. Now you can see those a little bit better. Okay, very similar to what happened in November. Very strong, quick bounce up in here. And now we've come back down. We're sitting at minus 59, so we're just slightly oversold. So really what the market did was it alleviated all that intense selling pressure and it kind of neutralized it. And now it can do whatever it wants to do. Summation index, though, it's telling us the selling pressure is pretty much in control. And look how we're down here at minus, what is this? Minus 13, let's round it, 1390, minus 1390. And, we've only been down here below zero just a couple of times in the last 3 to 4 years. And that was back here in March 2020. And then back at the end of 2018. And then the other thing I noticed is, look how this move did not confirm when the market went to higher high in the beginning of January. This did not even come close to confirming that move at all. So right now, I think this is painting a pretty negative picture for the market underpinnings, and we'll see what happens this coming week. Now, interest rates. Here's what's going on with the 10-year yield. You know, I have had this identified for a long time as a resistance zone up here. And where did that come from? Here's what I did. I looked back all the way over here, and I looked at the consolidation that had been happening. And yeah, it's not showing up great. It's a little bit better. Here we go. Consolidation was happening in February 2020, and then back over here at the end of 2019. And I just put basically a line right through the middle of that consolidation in both those cases. And it's really interesting that, you know, really we have struggled to get through that over the last year. I mean, we got up into it in the spring of last year, but then just got repelled back down. Then made another run here, October, November, repelled back down. And now we're making another run. And now for the first time, well, we broke slightly above it here on January 18th. This is the strongest move we've made. So now the real question is, where's this going? We break above this. This is a weekly view. Here's the longer term picture. Are we going to make a run for that trend line, or are we just going to make a run for 2%? I mean, we're at 1.93%. We're not that far away from 2% by any means. I mean, it's just slightly above this. So, you know, it's definitely making a breakout type of move. We'll see what kind of follow through we get this coming week. Okay, so that is the 10-year yield. We talked about the McClellan oscillator. All right, let's take a look at Apple. Okay, here is a weekly chart, long-term chart of Apple, and this is my latest take on this. You know, and I think this is the best picture that we've got in terms of the Elliott wave. Where I'm starting this is back in July of 1997. This is where, and that is the low, and actually it came back down to almost exactly to the penny to that in December of 97. But right here in the summer of 97 is when Steve Jobs came back to Apple. And then, you know, you could see, you know, of course, you know, the huge move that's happened since then. But I believe what has occurred here is that since 2009, we've been in an extended fifth wave, okay, much longer than either wave 1 or wave 3. And so right now, based on the wave structure, based on Fibonacci projections and Fibonacci relationships, I believe we're at the tail end of this, and I think that the high that just occurred in January is it. I'm going to get rid of that because I don't need to see that on the weekly chart. But where I want to go is go to the daily view. I'm going to take it off a semi-log when I go down to daily because it just I don't need it for this short a time frame. So the thing I want to focus on is where are we now? Here's the fourth minor wave, March 2021. And I think since that low in March of 2021, I think we've got 5 waves up. And here's the fifth wave in here. And when did that happen? The high, let me zoom in. The intraday high actually occurred on January 4th, one day before, let me go back. One day before the intraday high occurred on January 5th in the Dow Industrials. So now, since the Dow peaked on January 5th, and of course Apple is part of the Dow Industrials, but I just want to show you it appears to be in sync with the Dow Industrials here in terms of what it's doing. Now, when you look at the daily, it kind of looks like, oh, that just looks like a little 3-wave move, but just like on the Dow, when you drill down and take a look a little bit closer, I think there's a little bit better story to tell that we had a 5-wave and then a wave 2 pull back. Then we had our wave 3, a small wave 4, and then we finished off with a strong wave 5 to complete wave 1 down. Then we get this very strong wave 2 pullback in here. And the other thing is showing up, look at the divergence showing up. This is an hourly view in this last push in here of this move, okay? And so as we come back down, it's very similar to what I just talked about with the Dow Industrials. Look how the last hour of the day and how we're coming down. My expectation is for this to continue to roll on, continue to push to the downside and to proceed with a third wave, which should become, let me go to the 130-minute chart, should become a lot stronger than this first wave. So that's what we're looking for at this point in time on Apple, okay? Pretty much in sync with the Dow Industrials. Okay, that's it for this video. If you felt like the video was helpful, give it a thumbs up. If you're not a subscriber to the channel, hit that little subscriber button. And if you'd like more of this kind of information on a daily basis, head on over to joehenches.net and check out the website and check out the membership. Everyone, have a great week. We'll talk to you on the next video.